If you have kids, this one's for you. We're going to talk about the new child tax credit changes, who it's for, if you're eligible, how much, and how it's paid. Hey there, welcome to Modern Frugality. My name is Jen and I am the creator. I am so passionate about helping you have more money so that you can do better things with it. So the child tax credit, it's on everybody's mind right now because the first payments go out in July. But what is it? What's different? Who gets it? And how do you get it? So let's dive in. Now, what is the child tax credit exactly? It's actually the same child credit that you get on your tax return, but it's expanded this year and you're going to get payments early and incrementally. So last year in 2020, you got a $2,000 credit per child. In 2021, you're going to get a $3,000 credit per child. And if that child's under 6, it's actually going to be $3,600. And instead of getting that credit back on your tax return in a one-time tax credit, you're going to get it early and incrementally. So you're going to get up to half of $3,000 or $3,600 incrementally throughout 2021. As far as other changes go, now kids that are 17 can be included, whereas last year they were not. And the credit is fully refundable. You don't need any earned income in 2021 to be eligible. So a lot more families will get to it. There are some logistical nightmares that come in with getting this type of money to the people who need it most, specifically people with not enough to file tax returns. But they are working with nonprofits to distribute this money to the people who need it most. Now, let's talk about eligibility. Are you specifically going to be getting this tax credit? So your eligibility begins to phase out once you hit a certain AGI threshold. For single filers, that's $75,000. For head of household, that's $112,500. And for married filing jointly, that's $150,000. So if you make above that, you can still be eligible and get something, but it's going to be diminished by $50 for every $1,000 of income you have over that threshold. So say you have a 2-year-old and you're a married filing jointly household that makes $160,000. Well, that's $10,000 over the threshold. So 50 times 10 is $500. So instead of getting $3,600 for that 2-year-old, you're going to get minus $500, which is $3,100. Now, that's how much in total you can get, but how about how much you're going to get per month? So like I said earlier, you're going to get whatever your tax credit is, and you're going to get half of that in 2021. So if you're eligible for the full $3,600 for one child under 6, then you're going to get $1,800 in 2021. And that's going to be broken up into 6 payments that are going to come between July and December. So $1,800 divided by 6, that's $300 a month. And again, this is per child. So if you have more than one child, then you will get more. If you have a child under 6 and a child above 6, then you're going to get different amounts for those different kids. And what does this mean for your 2021 taxes when you file them next year? Well, this means you're only going to have an $1,800 tax credit for that child, whereas this year, or in 2020, you had a $2,000 credit. So you're going to want to pay attention to your taxes because that credit is going to be lower, especially if you were on the fence of maybe owing. But don't be surprised when your tax refund is lower next year because you're getting some of that tax refund earlier in 2021. But it's actually a good thing to get a smaller tax refund because it means you didn't pay so much in taxes throughout the year. And as far as how you'll get it, most of them will be direct deposit. If you change bank accounts or maybe the IRS doesn't have your bank account, then you can get it via a check or a debit card. And those will be sent out via direct deposit on the 15th of every month, starting July 15th. And if the 15th is on a weekend or a holiday, then it's going to be on whatever business day is closest to that day. And I can't end this video without telling you how to spend this extra money, because it's not just money that you can take and spend it frivolously. This is part of your tax return that as a taxpayer, you're entitled to. So if you weren't getting it back, it's not like free money. You are actually paying for it. You are entitled to it. So you should steward it as wisely as possible. So there are 3 things that I think you should do step by step, order of operations. And the first is get an emergency fund. You need an emergency fund before you do anything, because the worst financial decisions that we make are based on fear and catastrophe. And let's face it, most of the catastrophe in our lives is from our kids getting injured in some like really weird way. So avoid those bad financial decisions or decisions made out of emergency by having some cash that just sits in a separate account and is waiting for you for those moments. It takes what could be a crisis and just turns it into an inconvenience. So I recommend having that in a high yield savings account, and I'll put my recommendation for my favorite high yield savings account in the description. But it is a little hedge against inflation when you keep it there. But the biggest thing is it keeps it away from your spending money so that you don't spend it on anything but emergencies. If you already have an emergency fund that's 3 to 6 months of your expenses, preferably 6 months, then pay off your high interest debt or pay off all your debt. I know that this is kind of feels like your kids' money, so maybe you should spend it on your kids, but trust me, your financial security is the best gift that you can give your kids every month. My mom spoiled me with like tons of crap growing up, and I love her to death. I had a great childhood, but she didn't save anything for her retirement. And in her later years, I know I'm going to be spending time and possibly money taking care of her because she didn't give me her financial security. So give that reassurance to your kids. Give your kids that gift by paying off your debt and then doing step 3, which is investing. You can invest as little as $10 a month. And heck, if you have one kid that's over 6, you're probably getting $250 a month, and you can do a lot with that. And you can promise your children a financial security that maybe wasn't promised to you. So I will put my favorite robo-advisor for an IRA. That would be really great for your retirement, or you can invest it for your kids' college if you really want to put it towards your kid. I'll put my favorite 529 plan in the description as well. And so I hope that you are getting this child tax credit, or I hope you make so much money that you don't qualify for it. But I don't know why you'd be watching this video if that is you. So please let me know in the comments if you're getting the credit. Let me know if you have any other questions about the credit too. Happy to answer those. And other than that, like and subscribe to the channel for more videos like this.